Imagine losing $4,500 on the AMC stock. That's what we're talking about today, but don't worry, we're actually talking about the AMC stock from the standpoint of the future, the fundamental analysis, and talk a little bit about what actually happened. We're gonna have a little bit of a story time. If you're ready to get started, tap the thumb, let's get right to it. So I was talking to one of my friends and they said, hey, I actually originally invested in AMC a long time ago. And I said, oh, okay, what does that mean? He's like, well, I sold out because I thought that the run was over. And I said, oh God, tell me you didn't lose money. And he said, yeah, I lost money. And then I asked, can I share this with my viewers? Do you mind if I actually pull up your account? What do you use, by the way? He uses Webull, just like I do. That's cool. I'm like, do you mind if I share this? I got his approval, and that's what we're gonna share with you today. So we're gonna start with this example. I'm gonna explain why I'm sharing this example, and then we're gonna do a fundamental analysis of AMC stock. So let's get right to it. I'm gonna pull up my iPad screen, in fact, and I'm gonna walk you through what he shared with me. So as you can see right here, here's a screenshot of his AMC, what was his holdings in Webull. But look at this right here at the top. That's a P&L of negative $409.96, which means his hard-earned money, he lost $500. So no matter how much he put into this, let's say, whatever it was, he lost $400 of it. But if you look right here, this is kind of the key date that it all went to hell. On 2/8/2021, that's February 8th, he sold 123 shares, which I believe was his entire holding of AMC, for an average cost of $6.11. Now, those of you who are big on AMC that really appreciate it are probably dying inside right now looking at this. And so this is why I want to share this with you, because this is absolutely wild to me. So here was the deal. It was January 2021. And he was looking at it from the standpoint of, okay, I have some overall stock holdings of AMC I bought along the way. And you can see that, right? You can see 22, 22, 22, 23, 24, 28. He was buying, and it's obviously before that too, because this only goes down. I can't scroll up on this at all. But total of 123 shares, right? Well, his point was, I'm gonna pull up the graph here, back in like January 27th, 2021, as you see right here, it's going for $19.90. And that was right around the same time as the GameStop squeeze. So what was going on is he bought in right down here as it's going down, right? So February 5th, that's what he has going on. And his thought was, oh, it just keeps going down. Every time I buy it, it loses more. And you can see that in his example. Look at that. In his example, it just keeps going down. 675, 750, okay, 940, but then 722, 647, and downward it goes. So he stops on 2.8, and then he gets tired of it, and he says, okay, it's gone from 647 down to 611. It just keeps crashing. I need to cut my losses, right? But the issue was, he didn't trust and believe in the company, and that was the whole problem. Now, I'm not saying that AMC is a buy, hold, or sell, and this is not financial advice. What I want you to get in the mindset of is being a smarter investor, and I think you are smarter because you're watching this channel. So hats off to you for that. But look at this. So if he would have done some fundamental analysis, and if he would have actually watched the news as part of the fundamental analysis, perhaps he would have either not bought into AMC at all, or he would have held on for the long term. So let's take a look at this. If he would have held, and let's say he would have sold here instead. Let's go up here. I'm not gonna go to the ultimate high right now. I'm gonna go here to June 18th, $59.26. So he decides to sell his 123 shares on June 18th. He would have had $7,288. Now, I don't know what his entire cost was, his cost basis on this, other than the fact that he lost $409, but let's just say it was $409 and he lost everything. He would have been up to $7,288 if he would have held on from February to June and sold on June 18th. Now, where we are today, as of the recording of this video, as you can see right here, is $36.84. So we take $36.84 times 123 shares that he owned. He would today have $4,531. Of course, down from that 7,000 number, but still looking pretty darn good compared to where he ended up, which was actually in the negative. So that's my whole point. He could be up to $4,500, and who's to say it doesn't keep going up in the future? And that's why we want to do some fundamental analysis. Is AMC poised to continue potential growth? Now, a lot of things were happening with AMC, especially if I go to the 5-year chart. It goes down, down, down. There wasn't much going on for it. People are starting to turn away from going to the movie theater, and at the same time, you have the pandemic that forces people in their homes away from the movie theaters. A lot of things going on. But I do think, outside of the fact that this becomes a meme stock, as some news articles like to say it, there's also some interesting parts about AMC as a company that we need to understand, especially if you're either a holder or you're interested in investing. Make sure you do your own research. And I'm going to share with you an absolutely free resource that you can use, and you can kind of do your own analysis and see how AMC is trending. So go ahead, comment down below and let me know, what do you think? Does your stomach hurt looking at that and seeing 123 shares sold? And that's what I mean by losing $4,500 on AMC stock. Even though he lost $400 for real, the true cost, what we'll call the opportunity cost here, is that he lost $4,500 because as it stands today, right now, at the recording of the video, he would be at $4,500, and he gave that up. The only reason he bought so many shares of AMC is because everybody was talking about it. It was all over YouTube. It was all over Reddit. It was all over everywhere. And he thought, oh, maybe this is the time. Didn't do any research, didn't understand it, got nervous, got emotional, and sold out. Now, if you've ever been in that case, or maybe you have a story just like this one, look, we've all been there. We've all had problems. I've had a problem with Circuit City. Remember Circuit City? Anybody remember Circuit City? If you do, drop a comment and let me know about Circuit City. Circuit City was something that I bought into because I didn't understand what was going on. I didn't do fundamental analysis back then. And what I did is I bought a few shares, didn't realize that brick and mortar companies were going vastly out of business at the time. And furthermore, Circuit City was just so old school that it was screwing itself over. Its financials were terrible. And if I would have just looked under the hood of this vehicle and looked at their financials, I would have realized Circuit City is garbage. Just because I shop there for my TVs and my computers does not make it a good company. Just because you like it, that's only one piece of a very, very large pie. And that brings us to the fundamental analysis of AMC. So if you're wondering what's AMC going to do in the future, I think it's important to look at the news and its potential. And I have a few things to share with you on that, but I'll get to that in just a moment. Let's first look at Simply Wall Street. Now, this is free. They don't sponsor me. They don't even know that I'm talking about their website. The reason that I like this is because I found it, and I'm not just going to hold it in for myself. I'm going to share it with you guys in the community. So I was not paid for this. I don't make any commissions on this, although maybe someday I might. But right now, I just found this over the last couple weeks. I've been using it and I freaking love it. So there's a free version and then there's also a premium version. Right now, if you see in the top right-hand side, I decided to sign up for their trial. I have 7 days left and then I'll go back to the free version. What I have up on the screen, as you can see, is AMC Entertainment. Let's take a look at this, and then I want to break down where I see this potentially going in the future. So with AMC, you can see revenue is forecast to grow 41.82% per year. That's really good. That is what we call a green light, and that's what we like to see. You can see some risk, though. There's dilution in the overall shares outstanding, and it's not forecasted right now to become profitable over the next 3 years. And of course, a volatile share price over the last 3 months because it's AMC. So what I like to look at is this little chart right here. So you can see, first of all, valuation is not looking good. Let's look at that first. So in the valuation, right now, they think, oof, that's bad. 39 cents fair value. Significantly below. So you can view the data and they actually pull up why. They go through the different models that get them to what they arrive at, which is the fair market value. Price to earnings ratio is unprofitable because they don't make profit in AMC right now. There is a negative PE ratio. So let me go back up here though. Let's look at the future, right? Because that's where a lot of people are looking toward is the future. So if we click on this, you can see that the earnings and revenue growth forecast, this is what it looks like. So there's a little bit of, okay, I mean, earnings versus savings rate, they're forecast to remain unprofitable over the next 3 years. The revenue, though, is forecasted to grow. Now, there's a couple things that AMC could do in this case. They could say, we're going to manage our finances correctly to ensure that we turn a profit. Sometimes it can be in the eye of the beholder. How does that work? Well, if you make so much revenue, you decide to cut down some of your operating expenses, some of your BS charges, and let's be honest, a little bit of that CEO salary. If you can bring that down a little bit, you could potentially turn a profit. And what I mean by that CEO salary, if you look here under management, number 6, and I click on that, this one got me a little bit concerned because right now the CEO is making $20.9 million a year. But the problem with it is when you're sitting there making $20.9 million a year in total compensation, which could include your salary and a bunch of stock options and everything like that, well, the problem is you're unprofitable. So you walking away with $20.9 million when your company is not profiting, I don't think you deserve that. That's my personal opinion. And if I was an investor of AMC, which in transparency I am not, but if I was, I'd be a little bit worried about that. I think you could donate some of that to the cause of profit. Now, I know some people are in AMC because they're trying to say, look, this was a heavily shorted fund. There was a lot of hedge funds. There was a lot of BS back in the day, and we're going to hold because we're apes. And I appreciate you for that, but just know what you're getting into when you do these type of things. All I shared with you is actual fundamental facts. The fundamentals you may not care about, and that's okay. You just got to decide what's best for you. None of this is financial advice. But here's a glimmer of hope. There is an opportunity I see with AMC more than I see with GameStop, if I'm to be completely honest with you. And that is the fact that AMC has a lot of upside potential in the future. One of them being AMC Plus. They have an opportunity to really scale up their at-home services. Now, I subscribe to AMC Plus, and by the way, they also have Shudder. So if you're into horror films like Halloween, Scream, and all those other cool things, they offer a great streaming service called Shudder. Very similar to Netflix, only it focuses strictly on that genre. Not only that, what could they do to continue to scale up the opportunity to have theater direct to home? Let's be honest, even though the pandemic may go away, I think it's good to diversify ourselves. We have our movie theaters, but let's also figure out how do we get those type of new releases out to the people. We already know that Disney's doing it with their Disney Plus program. Now, of course, they own the films that they're releasing, but how can we as AMC capitalize on that and figure that out? That, I think, will continue to help boost up their revenues, boost up their subscriptions, and potentially show them some profitability in the future. And then there's this. And this is a really good story from CNBC, AMC, and Sony offering NFTs to people who purchase advanced Spider-Man tickets. So you buy a Spider-Man ticket, they have one of 86,000 non-fungible tokens that they're offering as a result of you buying a ticket to this movie. This is a differentiator. Every time we can make ourselves different from our competitors, we're feeling good, and that's what we want to see as investors. This article says, Spider-Man No Way Home ticket rush crashes AMC and Fandango websites. Positivity, right? You have a movie that everybody wants to see. Well, how do we as AMC get ourselves front and center on that one? How do we make the movie theater of choice be in your mind for watching Spider-Man? Beyond just the meme stock that happened back in early 2021, a little bit more than that. So we have a bunch of risk and we have some revenue that we talked about. But what are your thoughts on AMC? Comment down below. And more importantly, as any type of investor, it's always a good idea to keep an eye on the companies that you own. Are they doing what you expect them to? If you're expecting them to continue to scale up their streaming service, scale up their profitability, you better make sure they're meeting your expectations. Otherwise, you need to pull them into your office and have a discussion. And check out this video next, and we'll see you there.